I've never been more excited about crypto, but I also think that stocks are a core piece of any portfolio. So,
Yeah.
um, an ownership of real companies.
BitSwap is the hottest new way to trade tokens. Crawling all the top decentralized exchanges, BitSwap gets you the very best price and value for your trades. BitSwap is changing the game. Try it now at bitswapdex.io. Welcome to BitBoy Crypto, the largest crypto channel in all the interwebs. My name is Ben. Every day on this channel, I show you how to make money in cryptocurrency, except for Friday. This is now Stonks Day, where we're going to be showing you guys how to make money in stocks. Today, I brought on a special guest, Justin from A Couple Cents on YouTube, to discuss stocks in the world of Wall Street. We're going to be looking at how we, as crypto investors, can hedge our bets by other investments over this bull run as we go eventually into a bear market. So pay attention as we go on a journey from not knowing that much about stocks into becoming stock experts. Let's jump into the interview. Hey guys, I'm joined today by Justin O from A Couple Cents on YouTube. He is going to be playing a big role as we transition Fridays here on BitBoy Crypto to Stonks Day. Friday is Stonks Day. That's the new catchphrase. Justin has got a lot of experience. He's got a great YouTube channel talking a lot about stocks. He's covered a lot of crypto-centric stocks. He's also invested in a cryptocurrency, so he's got a lot of stuff to offer us. Justin, welcome to the show. How are you doing today?
I'm doing well. Thanks for having me, Ben.
Yeah, absolutely. Very excited. So to set this up for everybody, what we're going to be doing is, I don't know that much about the stock market. I want to know about the stock market. I want to get more invested in the stock market. I definitely have some stuff on Webull. By the way, if anybody wants to try out, we'll have a link down below for you where you get some free stocks. But I want to go on a journey where we go from not being super in-depth knowledge-wise about stocks to where we have a large portion of our portfolio allocated there, and we're very knowledgeable and we're making money, and everybody can kind of reproduce that. So Justin, let's go over your experience first. If you could kind of tell everybody what you do and a little bit about your channel.
Yeah, for sure. So kind of a Pan-American guy, grew up in Southern California, went to school in the Midwest, did the classic investment banking route in New York City. So actually worked on 60 Wall Street. Some of you would know some of the investment banks there. And after that, went to a kind of a $2 billion hedge fund to work as a investment analyst. And after that, went to a even bigger, one of the biggest hedge funds in the world, starts with a C, related to the GameStop saga. So a lot of you will know that name. Worked there as an investment analyst as well. After that, been serving the last 3 or 4 years as a technology CFO. So a little bit more on the Silicon Valley side. Been growing that business as the kind of the finance lead and strategy, helps with strategy as well. Kind of growing that business 10x over the last 3 or 4 years. So kind of have a wide swath of space across corporate finance, corporate investing. And along the way, I bought my first Bitcoin at $300 in 2013, I believe, kind of on that run up to 1,000, 1,200.
Yeah.
As we can all relate. And I didn't really go all in then. Really got the bug like a lot of us back in kind of 2016, but mostly 2017. Was lucky enough to get in before the big, but I bought a lot on the way up. So I've made money, I've lost a lot of money, and we've, I think gone through the same ups and downs. But I've never been more excited about crypto. But I also think that stocks are a core piece of any portfolio. So an ownership of real companies.
Yeah, exactly. I think that's that's definitely a good thing. And I recently did a video where we talked about my crypto exit strategy for this year, which I won't be exiting Cryptofolio, of course. Definitely not for content, but we will be moving a lot of our portfolio over as a bear market does kick in at some point, most likely at the end of this year. And we want to get more invested into the stock market. And we're so glad to have you on the show. And by the way, guys, make sure to go down below in the video description and go check out A Couple Cents on YouTube. He's got over 65,000 subscribers. Let's see if we can get him over 75K here in the next couple of days. And I know you're going to see your channel grow, come in here every Friday on Stonks Day. But let's just get into the nitty gritty. People like me this year in crypto are going to make a lot of money. And the question is, what do they do with that money? How can you hedge against a bear market with other kinds of investments? And so what is your advice to someone who, like me, got in crypto all in, or maybe they've just flirted a little bit with the stock market, but never really put a heavy emphasis on it? what's your advice? How do we go about getting into stocks?
Yeah, for just as a kind of disclaimer, everything is just analysis and opinions from us, right? So
Right, correct.
not
Not financial advisors. Yeah.
Yeah, we're not financial advisors. Just kind of putting that on the table. I just do do your own research. These are all just from educated folks and from all the research that I do as a professional, and just someone who also like is bent towards the crypto space. A lot of the professionals on Wall Street, even my colleagues who are really smart, really high earning, they're still not in crypto, right? So I sit somewhere
Another way to
between.
say that is lame.
They are lame, yes.
Thank you.
It's hard to. People tend to be very tribal on either end, right? Yeah. So I tend to sit in the middle. I'm just intellectually curious. So when you have made a lot of money in the kind of crypto space, when like I'm just going to use me as a pronoun. If I've done that, right? First of all, let's see. I think there's something from Warren Buffett that, like he said decades ago, every time you hold a stock or crypto, you buy it again that day. So every time you choose not to sell, you're buying it again, right? Because at every given point, you have the chance to sell. Like you can sell now. Crypto, it trades 24/7. You can sell it at any time. So with every second that you don't sell it, you're buying it again. So now we have to look at, what do you think happens to crypto from here? I'm looking at the chart right now, 55.7 on CoinMarketCap on Bitcoin. Personally, I'm super bullish on Bitcoin from here. But to your point, if you kind of follow Plan B, 100 trillion USDs, like stock to flow ratio types of predictions, we are getting towards there will be an end to the bull cycle, right? And I think the biggest power we have before predicting it really is dollar cost averaging in and out. So I think it makes a lot of sense to start dollar cost averaging out as we go up and up and up, right? So, but I don't think like you sell out your crypto or a meaningful part of your crypto all in one swoop right now, right? So a lot of us have gone from hopefully 3,500 in Bitcoin to 56,000.
Yeah.
Kind of crazy to say, right? And I would say like we are in the middle of the bull cycle. Wouldn't you agree?
Yeah, absolutely. I mean, we're probably in about inning 4 out of 9, I think here.
4 out of 9. But the weird thing about, I would say like exponential growth types of viral networks is the innings 5 through 9 seem to move so much faster. If you remember 2000,
the 8th and 9th inning, I just had this conversation with someone yesterday. They were like, "Oh, we're already in the 4th inning. That's like really concerning." I'm like, "No, all the runs get scored in the 8th and the 9th inning, and that's what makes it so difficult to get out, is because that's when the things are the best."
Yeah, exactly. Like we could see a flatline Bitcoin and then it pumped to 200 and then crash again, right? Like in a span. If you remember 2017, late 2017, I think it was early 2017.
Late 2017, early 2000.
Yeah, early 2017. It went up and down in like the matter of 6 weeks. Yeah, right. It was very, very quick. So always you kind of want to be selling on the way up, dollar cost averaging, right? Everyone loves dollar cost averaging down on Bitcoin and kind of using your paycheck, but the concept works on the way up too. Dollar cost selling, right? Yeah. So that's what I would consider doing. And then the other question is, where do you go? Right. So you can go to cash, but we can all agree, both stock people and crypto people can all agree that we want to own real tangible assets, not assets that the Fed is, money printer go burr, right? So, 1.9.
Did you just hold the money gun? Was that what that was? You just held the money gun?
Money printer go burr.
The money printer gun. Yeah, I love that.
This is it's when you have a very dovish Fed that's very apt to lowering interest rates and printing money, and you have a government that just passes $1.9 trillion of free money that's printed out of nowhere. So where does that come from? That's actually a tax on your dollars that you have in your bank. So the good thing about US dollars is it's legal tender, legal liquidity. So it's very quick. Like you can act very quickly. You can act quicker conceptually with cash than you can with Bitcoin, because, transfers between your Coinbase account or your Binance account to like TD Ameritrade or Schwab or something. It's just better when you have US dollars because, right? So, well, all I have to say, right, is you have to decide, do you think that you want to start dollar cost averaging out of the crypto space? I would say it's starting to make sense, but not yet, but soon, very, very soon, starting to make sense. I think now is not a dumb time to start doing that.
Well, I think that depends. And I started to make this point in my exit strategy video a couple of days ago, and I don't think I ever actually got back around to it. Who would have thought I have ADD? But the thing is that it depends on when you got in. If you got in at Bitcoin at $50,000, you probably should not start dollar cost averaging out right now, But if you got into Bitcoin below, especially below $10,000, if you got into Bitcoin below $20,000, even if you got into Bitcoin below $30,000, it's not a bad idea to start slowly taking money off the table. We actually take about 1% of our portfolio a day and move it over. And that is a pretty big amount. Sometimes it's less, sometimes it's more. We have a steady amount we move over every day, no matter what, because we know the prices are continuing to go up. So it's not like in 100 days we'll withdraw it all. We're taking 1% a day and the money's growing. So we usually, by the end of the day, or at least by the end of the week, we've actually grown more than we've taken out every single week consistently. But we're moving money out because we run a business, and it's a little bit different situation than a lot of people. Like, we have costs, we have bills. I have 20 employees, like everybody's got to get paid. And we want to make sure that we have this business for, 10 years to come, at least, not just, during the bull run. So I don't think it's a bad idea. I think it depends on where you got in at. And the question is, if cash isn't, where people should be putting money, and they should be exiting and trying to hedge their bets a little bit, where do people start looking for, those hedges at?
We are at a historic point. Interest rates have never been this low. I wish I could I think we're on Zoom, so I can probably share my screen.
Yeah, sure.
If I just find this Fed funds rate over time, and guys, I talk about this all the time on my channel. So if for those of you coming from there, I'm sorry for belaboring the point.
Oh, welcome viewers of a couple cents.
Okay. So this is the interest rate for the past 70 years, right? We are at a point where, after the great financial crisis, where Bitcoin was birthed, right? We hit zero interest rates. This is the first time this has ever happened, right? And so finally the economy recovered, quote unquote recovered, because we went off of the gold peg on the dollar in early 1970s, right? And so we're in this new regime where we're flirting with negative interest rates. We're at zero interest rates, and all we can do is print money. So like I was saying, we're in a unprecedented time. The government is printing so much money, and we've never seen the amount of liquidity just be printed like this. I mean, we're dwarfing the amount that we had post World War II. So in that sense, your dollar is going to weaken and get debased and debased and debased. And the Fed can't do anything because they can't lower interest rates much lower than this, right? We're already at zero, and all you can do is print money, print money, print money. And all you can do is hope the economy recovers, which I think we are. But the question is, have we done enough damage? And so I think we're going to have an inflation problem. The Fed is going to have to raise interest rates and, possibly stop printing money, but the value of your dollar is going to go down. So you don't want to be in dollars, and you don't want to be in bonds because rates are low. Like, why do you want to tie up money just for a 2% annual rate?
Yeah.
I mean,
that's old mentality.
That's old mentality.
2% gains. Yay. No, I wouldn't.
Yeah, exactly. So I think crypto is like Bitcoin. Everyone here on this channel is already in Bitcoin, I would hope. And that means corporate securities and real estate. The problem with real estate right now, especially for residential real estate that I have, is, everyone, because of COVID, is buying homes. Nobody's selling homes. So that means supply is down, demand is up. And rents are down because people are buying, and vacancies are up. So returns are just down across the board in residential real estate. I do like real estate for things like out there, like Fundrise, which is the one sponsor of mine. I really do like that because it's diversified and private, and the REITs that are publicly traded usually trade kind of like bonds, very, very sensitive around interest rates, unless you have a clear view around retail and office. So that leaves corporates. So crypto, and meaningfully Bitcoin, because I think there's a huge difference between Bitcoin, Ethereum, and everything else.
Right.
I'm not a maxi, but
I think you touch on an interesting point there, which is, the institutions, which, I mean, you kind of represent, is what you've been doing for a long time. Getting more into YouTube now, and I think being a little more free what you can say. But I think that the stock world, the Wall Street, the institutions, the big funds, they look at Bitcoin, Ethereum. They're not really looking at the other things yet. And I think that's a statement on the speculation of Ethereum as well. That's one reason why I think it's going to continue to move for sure. But you can continue. I just want to make that point.
Yeah. So I would say the two things I really like, right, are corporates. So you own a company, and two, you own transformational growth viral network, and the strongest network there is the network of money, which is Bitcoin. And so I would say also one thing to consider is we're not at the prices yet where I would say if you were holding your crypto for less than a year and you're in the US, it's probably not I mean, unless you have, right? Like I'm speaking towards the individual investor, not someone who has to sell for cash flow. So if you don't need to sell, I don't think we're getting closer, right? But necessarily at the point where you have to sell and take that short-term capital gains tax.
Yeah.
Right. So if you bought a year ago and a year ago was 30 some hundred, yeah, makes sense to take. I mean, you 15x your money, you're almost 20x your money, right?
Yeah.
Since just a year ago when it was at 3,800 as of today, that makes sense to maybe start selling to diversifying into corporate securities, which is owning a piece of a company, which is really great, right? And I would say we haven't gone through what I believe is the follow-on altcoin cycle, where the money pours into Bitcoin, which is the on-ramp. And then when Bitcoin kind of reaches the 8th, 9th inning, as you remember, of its bull cycle, a lot of that pumps into the hyper speculative stuff, which, that's where you get the pump. I mean, Ethereum really hasn't risen, if you kind of zoom out, in tandem with Bitcoin. So I wouldn't be selling Ethereum if you believe in Ethereum or anything lower than Bitcoin. I think you can kind of, I would say, follow the funds flow. So it's Bitcoin first and then whatever's after that.
Yeah, exactly. And so when you say buying literal ownership of a corporation, I mean, when you of a corporate security, like you're talking about stocks, right?
Yeah, stocks.
That is a stock. When we say the corporate security, you're talking about stocks.
Yes. So when you buy stock of Tesla, when you buy a stock of Apple, when you buy a stock of something sleepy like the widget maker or whatever, you own a piece of the business forever, right? It's like if you could, like, Ben, you could take your company public and people could buy a share and own a little bit of your company if you choose, as you know what I mean?
Yeah.
It's really, you have to think about it as literal ownership of a company forever.
Yeah.
And people treat it like a gambling tool, which is fine, right? But I'm an investor and I look through like accounting, financials, and all that stuff, and it's really literal ownership.
Yeah, I think that's a good way to look at it. And for a lot of people in crypto, I think it's very interesting to look at the crossover. If you believe in crypto, you believe in blockchain, then there are companies out there like the Coinbase IPO coming up, for example. Voyager is a publicly traded company. There are a lot of different companies in the blockchain crossover, including, the Grayscale stocks for the Bitcoin, Ethereum. You can get those sometimes at a cheaper price. You can actually get Bitcoin. Most of the time it's a premium, but sometimes, I think you can get negative on that, which is kind of cool. Just happened last week. So there's a lot of crossover with crypto stocks. And as we start this journey into crypto or into stocks from crypto in my portfolio, and I think, maybe it would be good if we show our stock portfolio in the future so people can follow along and track what we're doing. I think that'll probably be a good place for us to, continue to dive in, looking at what are the crypto crossover companies with stocks that if you believe in crypto, you also would believe in these stocks. I think that's kind of an interesting angle for us to go. So yeah, we're going to continue this. I know Justin's not going to be here with us next week, but either the following week or the week after that, we're going to kind of continue on this journey. Next week for Friday is Stonks Day. We're going to be covering Webull. We're going to be looking at a full review of Webull, where you can get free stocks if you sign up and things like that. Justin, thank you so much for joining us today. I look forward to having you in the future. Is there anything else you want to add for today's show?
No, I just thank you so much for having me on the show. And yeah, I do have my own channel, and find me over there too if you want more.
You guys can subscribe down below. And also, guys, make sure if you like Friday is Stonks Day, make sure to smash the like button so that way we know to continue this series. But we're going to continue it whether you like it or not. All right, guys, that's all I got. Drop us some comments down below. Let us know what you want us to cover. Be blessed. Good boy out.